And good day, everybody. Thank you for joining today's webinar, our discovery session about long-term care life settlements. We're going to spend the next about 30 minutes talking about how long-term care life settlements are used to help seniors who have a unneeded or unwanted life insurance policy turn that asset into funding to help them pay for care needs. I'm your host, Chris Orestes, the president of Retirement Genius, and Retirement Genius is an information and resource platform that's designed to help people achieve a well-balanced retirement. We focus on financial information and resources, health and long-term care information and resources, and lifestyle. We believe we need to bring these three pieces together to create a well-balanced stool of retirement so people can retire like a genius. Let's start by taking a look at the fears of retirees. What's driving much of the decisions that retirees make and the impact that it has on them and their families? Well, first of all, seniors are, as they should be, afraid of not having enough money to maintain their lifestyle throughout their retirement. They're afraid of running out of money and then becoming dependent on others, becoming either financially or physically dependent on others, whether it's spouses, extended family, friends, or professionals. People don't want to lose their ability to live independently, and then the need for long-term care and maybe even ending up on welfare, otherwise known as Medicaid, and being put into a nursing home. This trajectory of a retirement is what people fear most, and unfortunately, very many will end up confronting as their reality due to inadequate planning and inadequate awareness of their options, not only to plan for a retirement, but to how to successfully navigate living, aging, and even declining health in retirement. So there's a need for specific financial solutions to address the unique financial challenges that are brought on for seniors by aging and declining health. One of those that Retirement Genius specializes in, and we've worked with for approaching 2 decades now, is something called a life settlement, which is the sale of an existing life insurance policy to a third party for more than its cash surrender value, but less than its death benefit. With a life settlement, the owner is going to sell their policy. It's an asset that they can sell. So they're going to give up the ownership rights and the responsibilities for this part for the policy. A third party becomes the new owner of the policy. They're going to actually acquire the ownership rights and take over the responsibilities of maintaining that policy, otherwise known for the most part as paying premiums. Now, the third parties that are buying people's life insurance policies typically are not individuals. These are large financial institutions, hedge funds, investment banks, investment groups that are buying people's life insurance policies every year by the billions of dollars. Now, when a life settlement is complete, the new owner takes over the policy, but the insured remains the same. So the insured life that was taken out on that policy from the beginning will remain the same, but the original owner of the policy, who no longer owns it, is also no longer responsible for making premium payments. So a question then is, why do people abandon their life insurance policies? So primary reasons why people are going to let go of a life insurance policy and maybe consider doing something like a life settlement is they can no longer afford paying the premiums, or they've outlived the insurable interest that the policy was established on. The kids have grown up and moved on. They have their own life insurance policy, and they're asking themselves, why are we still carrying this policy when we're making tough budget decisions? We need money for retirement. We may be now confronting the expensive realities of long-term care costs, And we're thinking Medicaid spend down perhaps as well, where the life insurance policy is an unqualified asset for Medicaid eligibility. So when you think of a life settlement, the life insurance policy, that is the hinge of the life settlement transaction, is an asset. A life settlement is a way to get the hidden asset value of the policy. It's real market value. A good way to think of this is to think of it like selling your home. They're actually both recognized legally as the same personal property ownership class. Your home is something you make mortgage payments on for years. It's your personal property. If you decide you no longer want to keep that home, you don't drop your keys in the driveway and walk away. You sell it for its market value. Well, the same thing is true of a life insurance policy. You make premium payments for years on a policy. It is personal property. It's an asset that has value. There is a secondary market through which a person can access that value and sell the policy for its real market value. So when we're looking at the critical challenges for Americans, in particularly how they're going to fund long-term care expenses, we've got to look at a couple of demographic realities. 70% of people over the age of 65 are going to need some form of long-term care. Now, I know the vast majority of people think it's never going to happen to them, but they're thinking that at the exact same time that the vast majority of people have somebody in their family, somebody close to them, who is experiencing this exact dilemma. They didn't adequately plan for long-term care. It's expensive. One day it hits, and now they got to deal with it. And they're scrambling to figure out, what do we do? When you look at the reality of the aging population, baby boomers have been turning 65 at a pace of 10,000 boomers a day for almost 20 years, pushing at least, it's been 15 years now. Next year, this just coming in January, baby boomers start turning 80. This population, is aging and really hitting, is and has been hitting the point that they need to deal with long-term care, but the vast majority have made no plans for long-term care. Who pays for long-term care? Well, look, we all know long-term care is expensive. The average cost of home care on a monthly basis is $5,000, but in many places, it's easily double that. Assisted living, $4,500, but it can be much more expensive than that. Skilled nursing, very expensive proposition. Who's paying for this? Well, entitlements picks up a chunk. Medicaid is the default payer of long-term care in this country, primarily through nursing homes. So about 35% of long-term care expenses is covered by Medicaid. Another 25%, primarily rehabilitation care, covered by Medicare. And then there's private pay. 33% of long-term care is covered out of pocket. Another 4% is covered by long-term care insurance. Private pay, which most people think of as being long-term care insurance, such a small portion covered by long-term care insurance. And why is that? Well, because there's such a small amount of long-term care insurance policies in force in this country today. Today, there is 7.5 million in-force long-term care insurance policies for a population of 335 million people. Only 7.5 million have long-term care insurance policies. But to the point of today's discussion, life settlements, using a life insurance policy to help pay for care, guess what? There's 260 million in-force life insurance policies with trillions of dollars of in-force death benefit. The two biggest asset classes that people own in this country is their home and their life insurance policies. Everybody recognizes that their home is an asset that has value that they can sell. Not enough people understand that life insurance policies are exactly the same thing and that they can be sold too. Now, one of the dilemmas for life insurance and life insurance policy owners is the high abandonment rate. As many as 9 out of 10 life insurance policies that are ever taken out and pay premiums on are in danger of never paying their death benefit out because they'll either be lapsed or surrendered. For seniors, On an annual basis, there is over $200 billion of death benefit that could potentially qualify for a life settlement and be used to address shortfalls in retirement planning, healthcare, long-term care costs. But the majority of this will be squandered. It will be allowed to lapse. It will be surrendered back to the insurance company for pennies on the dollars. But for those who are smart enough to realize that they can access the life settlement marketplace, which has become a very mainstream market now, people have seen TV commercials playing every day, all day long, hearing it on radio ads, seeing it online ads for close to a decade now. We are seeing on an annual basis the life settlement market executing about $4.5 billion every year of life settlement transactions. But that's pulling off of a market size annually of over 200 billion. So the upside potential for this mainstream financial option to use a life insurance policy somebody already owns, that they've paid into for years, and now, while they're still alive, cash it out for its highest market value and turn around and use that for what they need in their retirement to address their budget and health and long-term care costs. That is a market that still has a lot of upside growth potential. Who qualifies for a life settlement? Well, the number one thing I want you to remember is the older and sicker someone is, the more a life settlement is going to work for them. And in fact, if you're too young or you're too healthy, you're not going to qualify for a life settlement at all. The minimum age for a life settlement would be 65 and above, although for very unique health conditions, terminal conditions, the age requirement can be overridden. But for the vast majority of people who are going to do a life settlement, they're really going to be in their 70s and above, typically in their early mid-70s through their early mid-90s, with health condition impairments that are chronic, terminal, shortening their lifespan to a point where, based on actuarial analysis on underwriting, it would be determined that their remaining life expectancy would be looking at maybe 10 years or less. Any kind of life insurance policy is going to qualify: a universal life policy, a term life policy, a whole life policy. Any kind of life insurance policy will qualify with a minimum death benefit of $100,000 or greater. So this is your universe of seniors that will qualify for a life settlement. If you're too young, if you're too healthy, if you could qualify to buy insurance, you will not qualify for a life settlement. If you could qualify for a life settlement, you would not qualify to buy life insurance or long-term care insurance. There are a variety of options people can use financially through a life settlement. We're going to focus on the long-term care life settlement, but as a quick review, there's the cash benefit settlement where somebody's going to receive a lump sum payment. There's a retained death benefit settlement where, instead of cash or a mix of cash and ongoing death benefit, they can receive without having to pay any more premium payments. So a reduced policy without any more premium payments. Also, a life settlement annuity, the ability to fund specific annuities that are designed for an aging population with a seamless transfer of the funds from a life settlement into the annuity, or the long-term care life settlement, liquidating a life insurance policy with a specific design to pay for long-term care services and the benefits that gets that person. LTC life settlements have been around for almost 20 years, and they're available in all 50 states. A LTC life settlement will cover the immediate need for senior living and long-term care services. Once you've completed the settlement, the LTC life settlement funds are available to you to do with as you please to meet your needs for any form of senior living: home care, assisted living, skilled care, memory care, hospice care, anything a person would want. It's important to remember that this is not long-term care insurance, and this is not an annuity, and it's not a loan on the policy. This is simply enough liquidating the life insurance policy to receive funds to turn around and then use and administer as you wish on your care needs. So there's no wait periods. There's no claims to file. There's just simply completing the settlement, getting your funds, and then paying for the care that you want and you need as soon as the policy is settled. This puts somebody in a position of private pay where they're in control to be able to spend what they need as they wish, start out spending at a certain amount on home care, maybe you have to shift to assisted living or more expensive home care, more expensive assisted living, whatever the case may be, you're in a position, you're in control to meet your needs as you need them. The funds paid towards care through an LTC life settlement are recognized as a Medicaid qualified spend down. You are liquidating the life insurance policy for its market value and then spending the money towards care. This is the exact definition of a Medicaid qualified spend down inside the spend down period. Remember, when you do the LTC life settlement, you are not going on to Medicaid immediately. You're remaining private pay as long as you have those funds available, but you're in a Medicaid qualified spend down posture. Also, the funds from the LTC life settlement can be tax-free. If the policy owner is medically diagnosed as chronic with 2 ADLs or more, or terminal with 2 years of a life expectancy or less, they would qualify for tax-free treatment across the board of their life settlement funds. And again, you then are put in a position where you have private pay dollars and you can delay the need to go on to Medicaid with a tax-advantaged way to liquidate a life insurance policy you already own. The entire transaction costs the policy owner nothing, and then they are beginning a Medicaid qualified spend down with those private pay dollars available to be spent towards any form of care they want in whatever manner they so choose. So let's take a minute to look at a hypothetical case study based on industry averages. Typically, here would be a very standard life settlement case that we'll see every day. An 80-year-old female with health impairments with a life expectancy range of under 10 years. She has $1 million universal life policy. She's been paying $30,000 a year of premiums, and she's built up $20,000 of cash surrender value. Now, oftentimes, in this exact moment, the policy owner and the family will be discussing, why are we still paying $30,000 a year in premiums towards this policy? There's $20,000 of cash surrender value there. Why don't we take that money? And that's going to be tax-free, $20,000. We can use that towards your budget, towards your care needs, whatever it is that we need. And that sounds like maybe that's a better deal than spending $30,000 again. Let's say they've had this policy in place for 10 or 15 years. But before they're going to do the surrender, they really need to be looking at their market value option for this policy through a life settlement. The average payout of a life settlement is about 20%. It can be as low as 5 to 10%. It can be as high as 50%. The average tends to be around 20%. This scenario here, 80-year-old, under 10 years, this would probably be in the neighborhood of maybe a 25% of death benefit payout. So instead of $20,000 of cash surrender value, they're getting $250,000 of market value. And if they've been paying premiums, let's just say for round numbers, they've made these premium payments for 10 years. They've paid $300,000 of premium payments. They have $300,000 of basis in their policy. Well, if the policy owner, the insured, doesn't qualify for tax-free treatment based on the health underwriting, she would also qualify for tax-free treatment because the amount she's getting in the settlement is less than the basis she has in her policy. Everything she has spent in premiums that she gets back in a life settlement is tax-free. tax-free. So this is a much better outcome for this policy owner who, by the way, has spent nothing to do this. And instead of surrendering the policy for $20,000, they're getting $250,000 tax-free because of their basis in the policy that they're now free to start using towards whatever it is that they need to address with their financial priorities. So let's shift for a minute to take a look at market regulation for the life settlement marketplace. First, to be clear, life insurance policies have been defined as an asset with the same personal property ownership rights as a home for over a century. In 1911, Oliver Wendell Holmes ruled that life insurance is an asset. When you look at the current secondary market regulation for life settlements across the country, it's important to point out that, as is the case with all insurance, life, health, property, casualty, whatever the case may be, life settlements are regulated at the state level. So currently, 45 out of 50 states have very specific life settlement regulations on the book covering 90% of the US population. But guess what? For the 5 states where life settlements aren't regulated, the life settlement industry runs the transaction just as they do in the regulated states for the sake of consistency across the board. Drilling down a little bit into the tax treatment, again, if your underwriting comes up as chronic or terminal, then you have a tax exemption for all the proceeds received from a life settlement to be tax-free. But if you don't meet that health definition, then anything you receive in a life settlement up to your basis in the policy, the premiums you've paid, are tax-free. If you receive money above your basis, then anything between your basis and the equivalent of cash surrender value in the policy would be taxed as income. And then anything you would receive above cash surrender value would be taxed as capital gain. Also, there are suitability and fiduciary issues that need to be pointed out that you need to be aware of, because over the last decade or so, there have been cases brought to court by policyholders who sued their advisor for withholding information to them about the life settlement option with a policy, and they held them responsible for the money that they lost out on. We have 3 cases that establish precedent in the courts where policy owners have sued their advisors and the insurance companies as well for having not fulfilled their fiduciary responsibility to have at least given them the information and let them know, if you have a life insurance policy, you could possibly do a life settlement. That is an option to take a look at and consider, instead of just lapsing or surrendering the policy. Regulatory and legislative bodies have been endorsing the life settlement approach for years. The National Conference of Insurance Legislators, NCOIL, has developed and introduced model legislation across the country going back over a decade now, specifically pointing out the use of life settlements as a tool to pay for long-term care, the alternative to lapsing or surrendering. And this also was endorsed by the National Association of Insurance Commissioners. The NAIC back in 2017 endorsed the concept of life insurance policy settlements specifically as a means to help pay for long-term care services. Congress, going back now about 4 or 5 years ago, introduced a bill, HR 5958, the Senior Health Planning Account Act, that would specifically make changes in the IRS tax code that anybody using a life settlement to pay for long-term care expenses by putting it into a dedicated account and then reserving that money to start paying either now or in the future would have a tax exemption for the life settlement, regardless of their basis, regardless of their underwriting. In terms of how to work with the life settlement option in your practice, you want to look at this as a way to bring new value for you as an advisor to your clients. This is using a policy that's already owned, that's already been paid into, and quite frankly, is an overlooked asset, and turning it into a new funding solution for retirement and long-term care costs. This is a way to take old business and turn it into new business and create, quite frankly, a recurring revenue stream for any practitioner who is using life settlements with their clients to make sure they understand that they shouldn't be throwing away life insurance policies when they could be accessing their real market value. Couple of different ways that the market can be penetrated. One is at the retail level by talking to your clients on a one-on-one basis, on a daily basis, integrating this into what you're doing to advise your clients, what you're doing to do your marketing, what you're doing to do public speaking. This should be a regular part of your planning strategy at a retail level or at a wholesale level, going back and looking at your book of clients. Looking for who might be in a position to use a life insurance policy in this way to address their financial needs. And maybe this is something you had overlooked previously, but now you have this in hand and you can go back and recover those bases by talking to clients. Retirement Genius offers a life settlement direct program to the advisors we work with. It's a lead referral system where we do all the work. We're a turnkey front end for marketing, back end for case management and settlement processing. This means for anybody who uses our system and wants to refer life settlement cases in for us to manage for them, regardless of whatever type of advisor they are, they don't need any additional licensing. E&O coverage is provided to those that are using the system. Marketing materials, back office support is provided at no cost whatsoever to practitioners we work with. And then because this is a no-load life settlement, there's no commission that's being taken out of the settlement before it gets to the policy owner. The policy owner gets their full settlement offer, and a referral fee is paid back to the advisor who refers the case into Retirement Genius after it closes. So this is a no-load referral fee-based system. This is not a commission-based system. Retirement Genius provides what we like to call a life settlement campaign in a box. Settlement in a box, a turnkey system on the front end and the back end of the settlement transaction at no cost to the advisors that we work with. This system provides a host of marketing materials, whether you want them to use them as email, online, printed flyers, materials, case studies, drip systems for emails and online videos that you can use that will explain life settlements in either an unbranded or branded option. You can use our videos as unbranded and put your own branding on them, or you can use them as Retirement Genius videos. So what you need to remember about life settlements and using this program, one, that life settlements are really designed for seniors. This is a unique financial transaction, and quite frankly, just about the only one that exists that will economically reward people. The older and the sicker they get, they are going to get more value from their life insurance policy through a life settlement the older and sicker that they are. This is a unique tool to help find ways to pay for long-term care. It's a Medicaid qualified spend down. It is a tax advantage way to pay for long-term care. It's a way to take an asset you already own and without any cost, convert it into funds to pay for long-term care. And it's the legal right of the policy owner to be able to use life settlements in this way. There are no costs whatsoever for any advisors to use the Retirement Genius Life Settlement Direct program, and there are never any costs for the consumer, the owner of their life insurance policies. As we've gone through, there are tax advantages, and the process is actually pretty quick and easy. It takes 60 to 90 days to complete a life settlement, and we're doing all the work All we ask the advisors we work with is to forward us any information they have about a potential lead with a client who has a life insurance policy or maybe has a life insurance policy, and let us take it from there. Let us do the work for you. So I want to thank you for joining us today for our LTC Life Settlement Discovery Session. I'm your host, Chris Orestes at Retirement Genius. We'd love to talk to you. Give us a call at 866-602-5000 or email us at info@retirementgenius.com. We would love to set up a one-on-one discovery session with you and your team. We have marketing materials ready to go, getting you set up in our system as a advisor to refer business is very simple, no cost, can be done in a matter really of minutes. With everything, your entire LTC Life Settlement Toolbox campaign in a box ready to be sent to you by email. So give us a call, shoot us an email. Thank you so much for joining us today. We look forward to talking to you soon and working with you.